Hey everybody, so in this video I wanted to talk a little bit about Target. So Target just had their earnings a few days ago, and this was the main headline. It says Target organized retail crime has driven 400 million in extra profit loss this year. So this is just a little bit misleading because it's not the entire year, it's just so far this year. So they're actually expected to lose 600 million for the entire year due to organized crime. So, where did they find this information? Well, they found this information in the earnings call, and this is the transcript right here. So, as you guys can see, November 16, 2022, Q3 2022 Target Corporation's earnings call. So, the information that we're looking for is right here. It says a second factor that is impacting our gross margins is inventory shortage or shrink, which is a growing problem facing all retailers. And it basically says right here, it reduced our gross margins by more than 400 million versus last year, and we expect it will reduce our gross margins by more than 600 million for the full year. And he goes to mention that this industry-wide problem is often driven by criminal networks. So long story short, hey, you know what? We lost $400 million so far this year due to organized crime. That is the too long didn't read. Now, if we're going to go over to their income statement, how does this affect them? So it says right here, gross margin. So their gross margin was affected by theft. So this essentially means that it's likely going to be rolled into cost of goods sold. So if we're looking right here, here is their third quarter earnings press release. If we scroll down a little bit, it's going to show their income statement. So right here. So here's the sales. Here is the cost of sales. Now, we don't really want to pay attention to other revenue because other revenue doesn't necessarily mean that it's related to operations. So if we're just looking at margin, we're just looking at the sales minus the cost of sales, and that's going to be the gross margin. Now, if we're going to do the gross margin percentage, it's going to be the gross margin divided by sales. So take a look right here. We have the 3 months ended and we have the 9 months ended. So far, if we're looking at the 3 months ended, revenue grew by 3.3%. So not a whole lot. And if we're looking at the 9 months ended, revenue changed by 3.5% to the upside. So here's the main thing. The main thing I want to focus on is the margins. So they show us these margin calculations if we scroll down a little bit. So right here, it says gross margin rate. So it shows us the 9 month. So the 9 month is what I want to focus on because this is a longer time frame. So it says for 2022, the gross margin rate was 23.9%. And for 2021, the gross margin rate was 29.5%. So what does this mean? It means that for every $1 of sales, they are retaining 23.9 cents. Whereas in the past, for every $1 sales, they were retaining 29.5 cents. That is a huge difference. That is a 5.4% difference. Keep in mind, this is a retailer that does over $70 billion in sales. So every percentage is huge. So how do they actually calculate this? Oh, I'll show you a sample calculation real quick. So let's scroll back to the numbers. All right, so here we are. So we're going to look at 2022. So I'm going to show you that calculation real quick. So their sales is 76,605. Keep in mind that's in millions, so that's actually 76.6 billion. So we're going to do 76,605. We're going to subtract that from the cost of sales right here, which is 58,283. And what does that come out to? It comes out to 18,322. But we want to know the percentage, so we need to divide this by the sales, which is 76,605. And then we multiply this by 100 to get a percentage. So that's 23.9%, just as they calculated. So yeah, we lost about 5.5-ish% on gross margin. So that's huge. So how does this affect earnings per share and net income? Well, let's just scroll down a little bit. So if we're looking at net earnings right here, it says 1,904 in the 9 months ending versus 2021's 9 months ending, which was 5,402. So that is a 64.7% decline in net earnings from the prior year. So that's huge. Now let's take a look at diluted earnings per share. So diluted earnings per share so far for 3 quarters is $4.09. Now if we're looking 1 year ago, for 3 quarters, it was $10.87. So that is a 62.4% decline in diluted earnings per share. So that's huge, you guys. That's huge. I mean, that's more than 50%. So let's take a look at a few other things. So I want to just take a look at Target's revenue. So right now I'm on macro trends, and this just gives us a good overview. So we can see right here, the years are down here. So if we're looking at 2020, they were doing about $78 billion in revenue. But all of a sudden, now we go into the height of the pandemic, you see more and more sales. You see this massive increase in revenue. So yeah, it's right here, it's 78 billion. And normally, it's around 70 billion or so. If we're just looking throughout history, it's normally around 70 billion. So yeah, from 70 billion to all of a sudden 80 billion, 88 billion, 93 billion, 100 billion, all the way up here, 108 billion. So yeah, revenue growth is pretty crazy. So for a while, people were basically treating Target like a growth stock, because look, if we're looking at the year over year quarterly growth, we were seeing 24.72%, 21.25%, 21.12%, 23.36%. So basically for the full year, it was over 20% growth basically. So yeah, I mean, people were treating Target like a growth stock. Now let's go ahead and take a look at the PE. So if we're looking at the PE right here, right around 2018, 2019, this was trading around 12.5. And even before, in 2016, this was trading around like 12-ish, 11, 12-ish, went as low as 10. But take a look right here. All of a sudden, come 2019-ish, we start seeing multiples of 16, 19, 20. Where are we now? We're around 22.22. So yeah, I mean, this is Target for you guys. You're basically paying high multiples for a company that deals with grocery. Now, like I said, Target's revenue back here, it was normally trading within 70 to 80 billion. Now we're over 100 billion, and it's 108 billion more recently. So you have to wonder, hey, you know what? Was this all just because of all the pandemic money that got flooded into our economy? So, my personal thoughts, Target is expensive. So I hope you guys enjoyed this video, and have a good one.